That's it. I'm out. I have sold all of my shares of Apple. I've been an investor in Apple for over 15 years. And this is the first time that I've completely exited the position. And there are a number of reasons for this. Some of it comes down to the stock's valuation. Some of it comes down to the growth rate, just the numbers that we can see, the evidence that the company isn't what it once was. But the other thing is Apple just seems to have lost its magic. If you look at the devices that it's introduced over the past 5, 6, 7 years, they're not all that inspiring. The AirPods have been extremely successful, but that was a natural extension, really something that fit Apple's business model extremely well because it leaned into exactly what they do best, building really great pieces of hardware that are extensions of the iPhone. But then you look at something like the Vision Pro, and I think it's safe to say at this point that that is a complete flop. And then you look at what Meta has been building over the past 10 years, what they announced with Orion, that's a much more innovative product than you see coming out of Apple today. And if Apple is going to be a good investment at 30, 35 times earnings, this is going to be a company that's going to have to grow, and it's going to have to grow organically by getting people to buy more devices and better devices and more expensive devices, not by just squeezing more and more money out of the ecosystem, which is why their services revenue is up over the past 5 or 6 years. Their user base is not growing like it once was, if it's growing at all. And I think as these devices, particularly smartphones, look more and more similar, Apple's position as the premium supplier is going to really start to evaporate. And on top of that, they are nowhere near the lead in artificial intelligence, wherever you think AI is going. And I have plenty of questions about where AI is going, where there's going to ultimately be value added. But no matter where AI is going, Apple doesn't look like a leader. It's leaning on OpenAI for a lot of Apple intelligence. The things that it is doing on devices, it trained on Google's chips, on Google's cloud. It doesn't have industry-leading models. It's not even shipping a product at this point. I mean, that's really telling for where Apple is in artificial intelligence. So you add all these things together, I think it's a really poor investment right now. But let's dig into some of the numbers. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's build this story up from the most important piece of hardware, that is the iPhone. The iPhone is arguably the best consumer product ever created, and I don't think it's going anywhere anytime soon. I am certainly an iPhone user. I'm using it to record this video, but it's not a growth product anymore. And if you look at this chart, you can see that the last year that iPhone had revenue growth was actually their fiscal 2022. Likely that that's not going to happen again in fiscal 2024, which just ended. And we've seen that there's been pretty weak reviews and even orders for the iPhone 16. I don't think there's going to be an upgrade cycle like a lot of Apple bulls would have thought. And the reason is there's just not that compelling of a reason to buy a new iPhone today. Are the chips a little bit better than last year? Sure. Is the camera a little bit better? Yes. But what are the new features? What are the must-haves? There's nothing really there for Apple today. Apple Intelligence was supposed to be that next thing. It's not even shipping yet, so we don't even know if that's going to be something that's going to be compelling for users. But even with Apple Intelligence, is it going to be nice to be able to search and find an image of my kids from a few years ago? Sure. Is it going to be nice to be able to maybe condense an email or find a piece of content that is somewhere sitting on my phone? Yeah, that'll be great. Is it going to be a reason to buy a $1,000 or a $1,200 phone? Probably not, at least not ahead of when I normally would. I think that's what a lot of consumers are seeing with their Apple devices today. There's just no compelling reason to upgrade the way that there was a decade ago. I mean, a decade ago, you go 2 years and it was like you were getting into a completely new ecosystem because your phone worked so differently and was so much better than it was before. Now, if you're using a 5-year-old iPhone, you're probably still fine. But this extends to Apple's other devices as well. This chart shows Apple's revenue for Mac in blue, iPad in orange, and other wearables, home and accessories. So that includes everything from AirPods to HomePods to Apple Watch in purple. And you can see that there was a ton of growth from 2016 through 2022. What has happened since then? That segment, those three segments combined have gone from $110.7 billion in revenue to $93.3 billion in revenue over the past 12 months. There is a pandemic surge of Mac demand, but that was not something that was going to sustain because people just don't need to upgrade their Macs more than every 3, 4, 5 years, maybe at most. You could probably go 7 or 8 years these days without getting a new Mac. iPads also had a nice jump during the pandemic, but that was not sustainable. And then the other hardware pieces, the Apple Watch, probably maxed out in their market. AirPods, something that I need to regularly get a new pair of AirPods, but maybe not a huge growth market. So you see, the evidence is that Apple's other hardware businesses are shrinking even faster than the iPhone. So what is growing? That's services. And that is the services revenue that Apple wants to have with investors. But let's dig into exactly what those services revenues are. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Services revenue is again a catch-all for a bunch of the digital revenues that Apple is generating. So it's the 30% fee when you buy something in the App Store. It's their advertising network. It's Apple TV subscriptions. It's the fee that they get for subscriptions that are bought through Apple TV and their other streaming services. I know Apple makes it really easy to cancel things. So that's where I like to buy a lot of my streaming services. But Apple takes 30% of that. It also includes the around $20 to $25 billion check that they get from Alphabet, from Google, for being the default search engine on iOS devices. That is basically pure profit for Apple. So when you look at the growth in revenue in the services segment here, up now to $93.5 billion, that's $68.4 billion worth of profit. Around a third of that comes strictly from Alphabet. We also found out recently that Visa is paying Apple basically to not compete with them in the wallet business, in the credit card business. Apple could create competitors to both of those companies. We don't know who else is paying Apple basically not to compete with them, which ultimately ends up in this services revenue. And the reason that that's important is because both of those cases are in court right now. Is it legal for companies to pay another company not to compete with them? It may be found that Alphabet can't do that. That Alphabet can't make that payment. They're actually the one that's in court. But the one that would be impacted would actually be Apple, because Apple is the one taking Alphabet's money. So all of this is a long way to say that this services narrative has been what has helped drive Apple's stock higher, in part because services are a much higher margin business than the hardware business. But the services business may be squeezing more and more money from those hardware users and pushing them to other pieces of hardware in the future. I think we're going to go to a world where we're going to have a more open ecosystem. We're seeing that with a ton of startups. They're, instead of building apps, they're building what's called web apps. So they're building on the internet and on the open web so that they don't have to pay Apple's 30% fee. If you're building a startup today, why would you build a startup that from day one you're going to lose 30% of your revenue? That would just be crazy. Same thing with artificial intelligence. Those tools are not going to be built into iOS. They're going to be built into the cloud. They're going to be built with subscriptions that go around Apple's subscription fees. If Apple Intelligence is successful, are people going to be searching less on the phone? Is Alphabet going to be paying Apple less to be the default search engine? I think that's probably the case. So even this services narrative, I think, is going to turn around. And when it does, what is Apple stock going to be worth? Right now, shares are trading for 35.5 times earnings. On a forward basis, they're trading for 32.2 times earnings. That's indicating that investors expect not only revenue, but earnings to improve in the future. And I think all of the evidence points to that may not be the case. So that's the reason that I think it's time to exit Apple stock. I sold all of my shares because this is just not the company that it once was, and it's not the stock that it once was. If you look at when Warren Buffett was buying shares in 2015 and 2016, shares were trading for 10, 11, 12, 15, maybe times earnings. And the company was still growing at a rapid rate. Now you have the exact opposite. Very, very high multiple and no growth. That's not a combination that I like as an investor that's looking for asymmetric opportunities. But let me know what you think of Apple stock in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.